Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh and Priyanka Uppal, and over the next 1 hour we get you news and updates from within the country as well as across the globe, and also tell you which stocks you should be keeping on your radar. And speaking of stocks, Priyanka, firstly, very good morning. And let's also take a look at the Wall Street and the kind of handover that we have, because we're heading into the next year on quite a strong footing.
Absolutely. Morning, Shreyanshi. Very warm welcome to all our viewers. This is the last week of the year, and the way Shreyanshi marked it, yes, it was a record year for US markets also. Nasdaq gained more than 30% this year itself. But let's talk about how did markets reacted on Friday as well on Thursday. Of course, it was a truncated week. It was a holiday shortened week last year. But then Dow, that one erased earlier losses and squeezed out a small thinning gain in the trading day on Thursday. Market did make a strong comeback. In fact, the kind of gains we saw at the start of the holiday week. Dow closed the day with a minor gain. It was just 0.07. Closed at a level which was higher than 43,325. Lost about 182 points earlier in the sessions. S&P dipped about 2 points. That was marginally flat to negative at close. And Nasdaq also ended the day lower by falling more than 0.1%. So markets closed marginally lower on Friday. But then, yes, the benchmarks are headed for a winning fourth quarter. This year has been a record year for US markets, not just Nasdaq, even for Dow and even for S&P. Let's talk about bond yield also. Bond yield have been hovering around the same levels from last 7 months. It did rise 7 basis points and it closed higher than 4.6% last year. But then let's not forget, this is the last year, and the kind of gains we've seen on US markets and even in Indian markets. We've seen record highs on Indian market this year. This year has been spectacular, but then let's see how things fare out for the coming year now. What about oil, Shreyanshi?
Well, absolutely. When on one side you do take a look at Wall Street, and you do have that fourth quarter being almost ended on a very strong footing. But when you take a look at oil prices, they settle more than 1% higher and recorded a weekly gain also coming in low trading volume ahead of year-end. Now, this is a period that is marked by typically low trading volumes because it is a truncated week on account of a couple of holidays coming in, even for the oil markets. But you do have oil prices buoyed by a larger than expected drawdown also coming in from the US crude inventories last week. So even that is something that the market is looking at. When you take a look at price levels though, Brent crude futures, you're looking at an uptick of 1.2%. $74 a barrel is the kind of level that you're seeing, at least for Brent crude futures. And when you take a look at US WTI as well, an uptick of 1.4% or $70 per barrel levels is what you're seeing there as well. Now, on a weekly basis, both Brent as well as WTI also gained about 1.4%. So similar moves coming in on a weekly basis for both of these benchmarks. But when you take a look at US crude oil inventories, like I mentioned, fell by 4.2 million barrels in the week ended December 20th as refiners did ramp up activity, as well as the holiday season also boosted fuel demand. Now, this is something that has been quite a relief coming in, especially for the last couple of weeks. That's the kind of trend that we've seen, at least when you take a look at US drawdown as well. And you do have that sort of perk up coming in from demand right there. But when you take a look at the World Bank and the forecast that they had for the Chinese economic growth in 2024 and 25, even they're sounding quite bullish in terms of their forecast. They're raising their forecast, and on the back of that, you do have that also providing support, at least when it comes to oil prices. When you take a look at gold on the flip side though, you do have gold prices slipping as you do have US Treasury yields that dimmed non-yielding yellow metals demand as well. So you do have the appeal for gold taking a hit right there, Priyanka.
All right, and talking about dollar index, that one is of course on the up move only. It's about 108. Ever since we've seen it's been on a surge from last many weeks now, and that's what is creating a lot of pressure for emerging market. But the key events to watch, not much of events to watch. There has been a eventful week for last week for Japanese market at least. One more key event is that Japan's PMI manufacturing data is on the tab for this week. And talking about others, there are a lot of political events which are on the watch list for India. We have Punjab farmers. They are planning a mega bandh, so there could be some distortion because of this particular event. And of course, the second key event we are watching is ISRO is going to launch the SpeedX mission this week. So not much of the global events to watch out for this week. But then yes, this is the last week of the year. Let's see how do markets react this week.
Well, absolutely. Let's see how the markets react. But when you take a look at the cues that we have to watch out from Japan, you do have Jibun as well as Bank of Japan PMI manufacturing data as well. So that's something that we're keeping an eye on. In terms of other events, then there's Punjab farmers that are planning a mega bunch. That is something that we're keeping an eye on. And lastly, there's also ISRO that is launching the SpaceX mission as well. And that is something that we're definitely keeping an eye on as well.
Okay, now let's get you some more global stories. Let's get tracking the top headlines this morning. Now, lukewarm trade, what we saw in Asia Pacific markets, this was led lower by that weak handover from Wall Street on Friday. And the pressure was seen in South Korean stocks this morning. Stocks on the Kospi and Kosdaq, they opened both the indices were faring lower today after the deadly Jeju airplane crash on Sunday, which claimed 170 lives. Now, the shares of Jeju Air, that one also plunged 13% at the start of the session. Meanwhile, a bird strike has emerged as the possible cause for the crash after officials have not revealed that air traffic controllers had in fact warned the crew about the bird strikes minutes before the crash took place. While the exact cause remains under investigation, the incident has drawn attention to one international airport's history with such incidents. In response to the tragic incident, Joe Biden has offered his condolences and said the US was ready to provide any necessary assistance. The country is in a 7-day national mourning period. In fact, we did have some more updates on this particular piece of news. Shreya has been tracking this news very closely. Let's go over to her.
South Korea is seeing one of its worst aviation disasters since 1997. The Jeju Airlines flight crash landing has cost 179 lives, out of which, as per the South Korean Fire Agency, at least 65 to 70 people have been identified, but the identities of the other victims still remain unknown. Now, what the experts are saying regarding the cause of this crash landing is initial reports suggest that it is due to bird strike. However, there are other aviation experts that believe that this is more than a bird strike. Both sides of the flight of the aircraft, they say, had inoperable gears, landing gears, and that could be a direct cause and one of the major direct causes of this crash that happened that killed so many people. Now, we will of course have to wait and watch when the black box details will come out. 2 black boxes have been retrieved from the aircraft. One is partially damaged. So we'll have to, wait at least a few weeks or months even to get to know the actual details and therefore the reason of the, this crash landing that happened. But of course, this raises questions as far as the safety of aircraft and flights are concerned around the world. This is, not the first such incident that has happened in aviation, a bird strike or inoperable landing gear causing such a crash and leading to so many deaths. We will, of course, have to wait and watch what the aviation experts suggest when the black box details are out. But so far as we know right now, investigation still ongoing. The bodies are still being retrieved. The aircraft still being closely investigated, probed into all of its parts being closely examined to understand what must have happened at that exact moment when the pilot had declared Mayday. As far as condolences are concerned, the world is pouring their condolences. In fact, the Indian ambassador to Korea, Mr. Amit Kumar, has also expressed and extended India's condolences to the Republic of South Korea in this kind of painful time that the entire country is going through. A mourning period of 4 days has also been announced by the acting president of South Korea. So this is as far as the latest is concerned regarding this Jeju Airlines flight crash landing.
Radhan, that was the latest coming in on that deadly air crash as well, and that does raise a few questions. But moving on, then news flow from Russia, where energy giant Gazprom has said that it would be suspending gas exports to Moldova starting in 2025 due to unpaid debt, which is bracing for severe power cuts. Now, it also said that the company reserved the right to take any action, including terminating the supply contract with Moldova.
All right, now keeping it with Asia, the World Bank has gone ahead and raised its forecast for China's economic growth in 2024 as well as in 2024. But did warn that subdued household as well as the business confidence along with headwinds in the property sector would keep weighing it down next year as well. The World Bank now sees China's GDP growth at 4.9% this year. This is up from its June forecast of 4.8%. Although the growth for 2025 is also expected to fall to 4.5%. That is still higher than the World Bank's earlier forecast of 4.1%. Slower household income growth and the negative wealth effect from lower home prices are expected to weigh on consumption into 2025. This is what World Bank added.
Well, absolutely. Moving on then and shifting focus back to the United States, Treasury Secretary Janet Yellen has warned congressional leaders that the federal government will hit its debt limit as early as Jan 14th unless the Congress takes action or her department implements extraordinary measures to avoid default. Now, these measures have been something that Yellen has been talking about for quite a while, and you do have Yellen's letter also that indicates that the looming debt ceiling fight and the new administration is likely to take place in the early months of next year after President-elect Donald Trump failed to get a provision raising or eliminating the debt ceiling tacked onto an end-of-year spending bill as well. So that's the latest coming in as far as that ceiling is concerned.
All right, another important commentary which is coming in from ECB. The next interest rate cut by the European Central Bank could be longer in coming after recent uptick in inflation. That's the word coming in from Governing Council member Robert Holzman. Remember, the Eurozone annual inflation accelerated in November month to 2.2% from earlier 2.2% a month earlier. Now, ECB's 2% target rate, he also added that a likely scenario wherein Trump's tariffs may lead to an overall slowdown in growth, but also create inflationary pressure. But it all depends on the greenback appreciation, the euro via what we see, how euro will fare out in time to come.
Well, absolutely, and let's see how that really fares out. But time for a very quick breather on the show. When we come back, we'll take stock of how the Asian markets are faring, so don't go anywhere.
Welcome back. You're watching the Market Cafe on ET now. Time to get a quick check on Asian markets, Shansi.
Well, absolutely. Firstly, when you take a look at the Asian markets today, you're looking at quite a mixed handover coming in. At least when you take a look at Hong Kong's Hang Seng Index, that's at least the one that's holding on to a tinge of green at this point. Even Shanghai as well, 0.2% uptick coming in for Hang Seng. Even when you take a look at Shanghai, marginally holding on to that shade of green, but previously, it was in the red. So not much of a directional move coming in, at least. But as far as the Shanghai is concerned, when you take a look at Kospi as well, that is also the one that is holding on to a tinge of red as we speak as well. On your screen, 0.6% downtick coming in for that one as well. Even the ASX 200 is on the back foot as we speak because 0.5% decline is what you're seeing there as well. Now, you do have Japan's jobless rate for the month of November that came in at 2.5%. So that is something that we're looking at, and that is you do have Nikkei that is holding on to a 0.7% decline coming in there as well. So largely a very mixed handover is what you're looking at. Only Hong Kong's Hang Seng that's holding on to some directional strength as we speak, in Shanghai in the green, but marginally so. So that's largely the kind of handover that we have, at least as far as Asia is concerned. When you take a look at the Nifty though, in terms of where we closed, 23,800 is the kind of level that we were looking at least as far as the Nifty is concerned. And in terms of what we're hoping to open near, we're hoping to open near 23,986. So it's a gap up open that we're keeping an eye on. But let's really see how that really pans out for us, because not a very strong handover, at least as far as Asia is concerned, Priyanka.
Welcome back. You're watching Market Cafe on ET now. Moving on, let's get you some more key stories. Ministry of Statistics and Program Implementation has released the household consumption expenditure data for 2023-24. It highlights the average monthly per capita consumption expenditure in both rural as well as urban areas. How did they fare out? Prakash Pradarshi actually filed this report earlier. Let's get a look.
The MOSPI has come out with the household consumption expenditure survey 2020-24, which is primarily based on per capita consumption expenditure. And the significant part of this report is the narrowing gap between rural consumption and urban consumption. If you look at the findings of this report, which clearly mentioned that the average monthly per capita consumption expenditure in rural India estimated to be rupees 4,122 in 2023-24, which is rupees 6,996 in urban areas. Along with that, considering the values of the items received free of cost through flagship government schemes, the monthly per capita consumption expenditure in rural India is estimated to be rupees 4,247, which is roughly rupees 7,000 in urban areas. Along with that, in nominal prices, the average MPCE in 2023-24 increases by 9% in rural areas and 8% in urban areas. In addition to that, urban-rural gap in MPCE has declined to 71% in 2022-23 from 84% in way back during 2011-12. And the most significant part of this report is it has further come down to 70% in 2023-24. Also, non-food items remain the major contributor to the household's average monthly expenditure in 2023-24.
Well, thanks, Prakash, for getting us that update. But moving on then, India's current account deficit moderated slightly from a year earlier in the July to September quarter. Now the current account deficit stood at $11.2 billion, that is 1.2% of the GDP, and the figure now stands below the estimation of economists. So the estimated range was minus $18.5 billion to minus $13 billion as well. According to the RBI, net foreign direct investment was minus $2.2 billion and net portfolio flow was $19.9 billion. Now the deficit stood at $11.3 billion or 1.3% of the GDP in the same quarter a year ago. So that compares with the current $11.2 billion in terms of the India's current account deficit as well.
But then rupee has been in news from quite some week now, and that's all because the rupee has plummeted to a new all-time low of 85.8 also against the US dollar, marking its steepest intraday decline since March 2023. The currency's sharp fall was driven by domestic factors, which includes month-end dollar demand as well as the limited RBI intervention. Now, analysts attribute the decline to the rupee's overvaluation, with some predicting further depreciation to maintain export competitiveness. The RBI's intervention strategy may be shifting, and traders are bracing for volatility in 2025 due to global uncertainties.
Alright, then moving on, the Navi Mumbai International Airport finally witnessed its first commercial aircraft landing on Sunday. The airport, which began construction in August 2021, is expected to be operational early next year as well. And once completed, it will become one of the largest greenfield international airports in the country. In fact, on that note, let's get your ground report on that coming in from Astha then.
Well, we are here at Navi Mumbai International Airport, and what you can see behind me is the first successful landing of the commercial aircraft, which is Indigo A320. Now, what is happening behind me is the Adani officials formally welcoming the crew, which was the part of the successful landing of this aircraft. Talking about the inauguration of this airport, it is expected to complete in 2025 for all the commercial flights. Also, the features are the main point of this aircraft. This has 4 terminals and 2 parallel runways. This also has 350 flight parking space, and this airport can cater about 90 million passengers annually. Now, this aircraft has landed on the southern runway. A couple of months ago, Sukhoi fighter was also made a debut here for the testing of this flight. But now, commercial flight has made its first official landing here. This Navi Mumbai airport is connected by the internal railway connectivity, and it was inaugurated by the Prime Minister of India, Modi. Also, some of the features are the Mumbai airport is about 35 kilometers away from this Navi Mumbai International Airport. But if you take a help from this flight, it will take you only 40 minutes to reach Nariman Point. Now, this is some exciting features and a big boom towards Mumbai infrastructure, and hopefully it will be completed by 2025 for all the passengers.
All right. Thanks very much for bringing that report, Asta. Of course, what we've seen is a complete rampification what is going on through and through Mumbai. Moving on, before we bid a goodbye to 2024, let's take a look at which asset classes did better and how did gold as well as crypto perform in the year gone by. Here's Ashisha with the roundup of how it all unfolded.
Well, absolutely. What a year it has been for precious metals in 2024. Gold has risen a whopping 28% in calendar year 2024, which is the highest that we have seen since 2010. And remember, in 2010, gold had given returns of about 30%. So after that, this is the first time that it has given returns of as much as 28%. Silver, meanwhile, has also risen nearly 26%, highest since 2020. And in 2020, silver had given returns of nearly 48%. Let's also understand the trend and the kind of returns they've given on an annualized basis over the last few years. So this year we've seen returns of 28%, but in 23, gold had given returns of about 13%, flat in 2022, negative returns of 4% in 2021, and about 18 to 25% returns in 2019 and 2020, which was COVID year. There are several factors which has led to the move in gold prices in calendar year 2024. Central banks globally continue to purchase gold, and that has been one of the biggest triggers. Apart from that, geopolitical tensions, remember, gold is considered as a safe haven, and hence macro uncertainties and geopolitical tensions leads to increased buying for gold. China, remember, had stopped buying gold. Chinese central bank had stopped buying gold in May this year, but they resumed purchasing gold in the month of November yet again, and that has also led to the surge in gold prices in 2024. But despite the run-up that we have seen this year, several brokerage houses continue to remain very bullish for 2025 as well. UBS has given a target of $2,900 per ounce by December 2025. Goldman Sachs, meanwhile, has also given a target of $3,000 per ounce. So yes, we will not see the kind of returns that we have seen this year as far as gold is concerned, but outlook on gold continues to remain very positive when it comes to buying by central bank as well as safe haven buying that we could perhaps see in the next year as well. Moving on to cryptocurrency then, it's not just gold. Cryptocurrencies have also seen a solid return in this calendar year. Bitcoin has risen a whopping 119% this year so far. Ethereum is up 43%, but most of the gains came in after Trump was elected for several cryptocurrencies. So Ethereum, for instance, has risen 41% since 5th of November, and that's when Trump was elected. And Donald Trump's support for cryptocurrency has led to the surge in several cryptocurrencies, including Bitcoin and Ethereum. Remember, we have seen inflows come in for several ETFs, and that has also led to the surge in Bitcoin market. So, for instance, Trump's support for digital asset is one of the reasons, and higher inflows in Bitcoin ETFs. So, these are the main two reasons why cryptocurrencies have seen a solid run-up in 2024. But as I mentioned, outlook for 2025 also continues to remain very positive, and it has indeed been a stellar year both for cryptocurrencies as well as for precious metals.
Well, absolutely, Ashisha, stellar year indeed, and it does look like gold is going to continue to shine, and even cryptos, the outlook looks pretty bright when it comes to cryptos as well. But as we step closer to the new year, then let's get you a rewind of all the wealth creators and destroyers of the year gone by, then stocks that gained and lost the most in 2024. In fact, Snehi is standing by with just that.
Well, absolutely. Here's a roundup of the stocks and the sectors and the themes that were wealth makers and breakers in 2024. First up, let's start with equity. Let's talk about how Nifty has performed. This is a year where Nifty has touched 26,000 for the first time. It's advanced for the 9th consecutive year. So it's a year of advances coming in for the Nifty. And Nifty as of now is up 8.7% on a year-to-date basis. Here's a list of all the stocks that have done well from the Nifty 50 pack. Trent, M&M, BEL, Bharti Airtel and Sun Pharma have been your top gainers, with gains coming in from anywhere between 40 and 130%. On the flip side, what weighed on the index and what did not do well on a year-to-date basis is IndusInd Bank, Asian Paints, Nestle. You've Tata Consumer Products and Adani Enterprises with cuts of anywhere between 17 and 45%. Let's move away from Nifty 50, talk about Nifty Midcap 100 then. The Nifty Midcap advanced for its 5th consecutive year. It hit the 60,000 mark for the first time this year. And on a year-to-date basis, this index is up 23.2%. Here's a list of all the stocks that did pretty well, with gains coming in anywhere between 100 and 200%. So very stellar moves coming in for the Midcap index this year, the likes of OFSS, Dixon Tech, PB Fintech, BSE and Kalyan Jewellers. However, on the flip side, what did not do well from the Midcap 100 index, the biggest losers, Vodafone Idea, Bandhan Bank, AU, IDFC and Poonawalla FinCorp, with cuts of anywhere between 27 and 50%. Moving away from Midcap, let's talk about the small cap space then. The second year of gains coming in for the small cap space, up 23.5% on a year-to-date basis. Here's a list of stocks that have done well from the small cap index, from NCC to CDSL, gains of 70% to almost double coming in for the small cap index. What did not do well was likes of RBL Bank, Aarti Industries, Birlasoft, PVR Inox and Bata India, with cuts of anywhere between 20 and 50%. While that has been your index moves, let's also take a look at what the sectors were up to. Nifty Realty has been your top sectoral gainer, up 37%, followed by Nifty Pharma and Nifty IT. On the losing side, only two sectors that are ending the year in the red on a year-to-date basis. Nifty Media with cuts of 22% and Nifty FMCG down about 2% on a year-to-date basis. Moving on, let's talk about some asset classes then. Bitcoin, gold, silver and Brent. Bitcoin, gold and silver have done pretty well in, this year. However, Brent crude trading with cuts of roughly 5%. And other than that, let's talk about a theme that we have seen build up this year, and that is quick commerce. Comparing the old versus new, the traditional retail big box, if you take a look at DMart, that was down roughly 16% on a year-to-date basis. However, Zomato and the recently listed Swiggy have done phenomenally well, where Swiggy has grown 44% in the last 1 month and Zomato 126% on a year-to-date basis, almost doubling the wealth of the shareholders. So that's what the year has summed up to be like, and those are the biggest winning and losing names coming in for 2024 on a year-to-date basis.
All right, thanks very much. Very interesting data. Sneha, thanks for wrapping it up. We'll stay for a short break here. When we come back, we get you all the buzzing stocks for the day. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates. And it's time now to get you the futures and options roundup. In fact, Ansh is standing by with just that. Ansh, over to you.
Yes, so let's start with Nifty first. As you can see in the chart as well, Nifty closed in green, but it faced strong selling pressure of days high. But if you see on this chart, we are seeing that from last 5 consecutive sessions, Nifty has been hovering around that 200 DMA, indicating an important juncture around this level, which is around 23,850. Now, if you want to get on the positive side, we need to give a decisive break about this 200 DMA. If we talk about index future, then we are seeing open interest going up by around 4.7%, indicating strong long build-up, which is a positive sign. But if we talk about index options, then we are seeing most active call writing happening at that 24,200 strike, indicating strong resistance around this level. Now, if we talk about Nifty Bank, then Nifty Bank has been consolidating just below that 50 and 100 DMA from last 5 to 6 consecutive sessions, indicating strong resistance around this level. Whereas if we talk about index futures, then we are seeing that open interest has gone down by around 3.4%, indicating short covering, which is a positive sign. If we talk about FII, then in index future, they have actually added some long by around almost 400 contract, but at the same time, they have added short contract as well by 20,000, due to which their net position has gone down by around 19,670 contract, due to which the total long position has come down from 18.4% to just 17.1%.
They added some long position on there, and there was a trend. What we saw on Bank Nifty was for short covering. And stay there. We've got another piece of news to discuss with you, and that's the Jan seasonality. That how we've seen the kind of markets moving in December, and it seems like Santa skipped town in the month of December. Series ended as flat as ever, and this is what we've gathered from historical trend also. Now Jan also doesn't look very promising. Do tell us the important highlights of December series and what's in store for the new series now.
That's right, Priyanka, and today is the second day of Jan series, and we are seeing that this series has started with high rollover in this falling stock, which is United Spirits, IDFC First, HDFC Bank, Chola Financial and Supreme Industries. So we may see some good active participation in this counter in this series. Now, if we talk about specifically for Jan series seasonality, then we have collated data of a Jan series of last 5 years, and as per that, Jan has not been so kind to the market in recent year, because we are seeing only 1 out of 5 times Nifty has been green, giving an average move of minus 1%. For Nifty Bank, the story is worse because just 1 out of 5 positive with an average fall of over 3% we are seeing here. Now, if we talk about FI index future, then at start of December series, it was just 33%, but now it has come more below it, below 20% to around 18%. So here we are seeing, we may see some good positivity in the market because we have good exposure on upside.
Then Santa skipped down in December series, and it does look like it's quite a promising outlook as far as the January series is concerned. So that's a roundup right there. But moving on then, let's get you a list of stocks that you should be keeping on your radar bright and early this morning. We do have Ria who's standing by with just that. Ria?
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. First up, we have Coforge. Now, the board has approved the scheme of amalgamation of Signity Technologies Limited with and into the company. So keep your eye on Coforge on the back of this. We also have Hero Motorcorp in focus since the company has extended its partnership with Harley-Davidson Motor Company in order to extend the Harley-Davidson X440 into new variants as well as to develop a new motorcycle. We also have Utkarsh Small Finance Bank in focus today since the company has approved a proposal for the sale of NPAs and written off loans to ARC, and the aggregate principal outstanding as on September 30th of this year is rupees 355 crores, and the reserve price or the binding offer will be rupees 52 crores for this. We also have Narayana Rudaila in focus since the Health Insurance Commission of Cayman Islands has issued an insurer certificate valid from the 1st of January to December 31 of 2025, and this permits Cayman Integrated Healthcare Limited, which is a step-down subsidiary of the company, to offer health insurance in the Cayman Islands. Lastly, also keep your eye out on Nazara Technologies since they have completed the infusion of funds aggregating to rupees 64 crores in Nodwin Gaming Private Limited, which is a material subsidiary of the company. So keep your eye out on all of these stocks today.
All right. Thanks very much, Ria, for highlighting those stocks which could be buzzing in trade today. Now, moving on, let's get you some key brokerage note also. Jinay is here with us in the studio to tell us. Jinay, quite many reports in Ultratech, and the stock has been on the move on the back of news also. Tell us more on the brokerage notes.
Well, definitely there are many stocks that will be in focus on the back of brokerage notes. Starting up with Ultratech Cement. Now, Goldman Sachs have maintained buy rating and the target price is 12,460. What they say is that Star Cement stake is valued at an EV of 115.5 per ton of their FY26 capacity. Also, they believe that the company is now best placed for pickup in demand for cement. They are expecting a volume growth of 10 to 11% CAGR over FY23 to FY26. Moving on, JP Morgan has overweight rating with a target price of 1550 on Cholamandalam Investment and Finance. Now, the recent correction in the stock that they believe that offers a favorable risk-reward ratio over long term. Also, now the company can build a diverse retail franchise is what they believe over medium term, and the mortgage segment is what will be the key growth driver for the company going ahead. They're estimating a 26% EPS CAGR over FY25 to FY27. Moving on, Ipca Labs will be in focus. Motilal Oswal have a buy rating and the target price is 1980. What they say that the scaling of US business, also the outpacing IPM, that will aid growth for the company. They are working towards creating a new divisions and adding about 500 to 700 medical reps. Also, Motilal believes that there will be a 27% earnings CAGR, and they're anticipating an improvement in return ratio of about 16% over FY24, FY27. KEA Industries, next stock in focus. Motilal Oswal have maintained buy and the target price is 5,150. Now, the company has a strong potential, especially in the cables and wire segments over long term. They're focusing on gaining market share as well as expanding their capacity. Now they're estimating an revenue and EPS CAGR of about 17% and 22% respectively over next 3 years. And lastly, let's talk about Jefferies Greed and Fear report. Now, for Asia ex Japan, they have a long only portfolio, and the investment in HDFC Bank that will be reintroduced with a weightage of 4%. 1% holding cut will be there in Macrotech Developers, L&T, ICICI Bank and Axis Bank. Also, the investment in Siemens that will be reintroduced with a weightage of 1%.
Alright, and that was the list going in terms of the brokerages and what they had to say about a host of these counters that we'll be keeping an eye on. But moving on then, let's get you news from outside the world of stocks. Former US President and winner of the 2002 Nobel Peace Prize, Jimmy Carter, passed away at the age of 100. He was the longest lived president in US history as well. Rose from humble beginnings and had quite the journey coming in from being a peanut farmer to being the president of the United States of America. World leaders and politicians have expressed condolences as well as shared tributes on his demise. Meanwhile, Biden ordered an official state funeral to honor him. All right, then moving on, External Affairs Minister S. Jaishankar will be embarking on an official 3-day visit to Qatar beginning today to review bilateral ties in trade, investment, energy and security. He's scheduled to meet Prime Minister and Foreign Minister of Qatar. Moving on then, ISRO is set to end 2024 with a groundbreaking space docking mission scheduled for today. In fact, this mission will test India's capabilities in space docking, a key technology for future space exploration. It also marks a significant step towards crewed missions and collaboration in international space ventures.
All right, with this, moving on, some cues from regional areas. Protesting farmers in Punjab have called for a complete shutdown today, announcing road and rail blockades from 7 a.m. to 4 p.m. Meanwhile, farmer leader Dalibal's fast enters day 35 with the All India Kisan Congress extending support to farmers Punjab Month. Moving on, ahead of New Year's Eve, Delhi Traffic Police is set to impose strict restrictions around key locations from 8 p.m. on December 31st. Both private and public transport will be affected. Special checks for drunk driving will also be conducted to ensure safety during these celebrations. And talking about cricket now, India's top order crumbles yet again as they began a Herculean chase of 340 runs at the MCG. While Pat Cummins' fiery spell sent Rohit and KL Rahul home, Michelle Stark trapped Virat Kohli in the same old fifth off-stump line. At lunch, India was left tottering at 33 for the loss of 3 wickets. India still needs 307 runs in 66 overs to win the test match.
Alright, then quite the Herculean chase right there, but with that, completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Priyanka Opal, as well as the entire team that put this show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.